Hello, everyone. Welcome, welcome, welcome. So glad that you are here tonight. We're going to start off with our declaration. Can everybody see that? Awesome. So you're going to unmute yourselves. If you're not sure of how to do that on your phone, just tap your screen at the very bottom on the left. Should be a little microphone. So you can tap that to unmute yourself. And when we're done, you can tap it again to mute yourself once again. So everyone, would you please repeat after me? Our declaration for the debt weapon program is, this is my life.
This is my life.
This is my life.
I declare today my mindset has changed.
I declare today my mindset has changed.
I am clear about my path.
I am clear about my path.
I am debt-free.
I am debt-free.
I walk in the understanding of my finances.
I walk in the understanding of my finances.
I control my spending habits.
I control my spending habits.
I am not a consumer.
I am not a consumer.
I am an investor.
I am an investor.
My money works for me.
My money works for me.
All things are possible to me because I believe.
All things are
possible because I believe.
I am financially sexy.
I am financially sexy.
I won't give up.
And I won't give up.
And I won't give up.
That's right. Not give up. It is our responsibility to keep the movement going. And that's what we're going to do. All right. So I'm hoping you guys can see my PowerPoint. Welcome to the debt weapon. Can you see that?
Yes.
Awesome. So you could not see my declaration?
No.
Sorry about that, but you could hear me, right? All right. So welcome to the debt weapon program, Velocity Banking. We're so glad to have you guys on tonight. We're going to talk a little bit about my mentor, my hero, Sabur DeMary. He is a husband, a father, a brother, and a mentor to many. He's a real estate investor, has over 29 properties, approximately 1.7 million in assets. He's an accredited investor, legally allowed to trade securities between financial institutions. He's an acquisition manager of a $40 million fund in Texas, Florida, Georgia, and South Carolina. He's known as the mortgage note broker in the world of mortgage lending. He and his colleagues broker approximately 2.5 million a month. He has 4 active LLCs and businesses. He's a consultant of Velocity Banking, credit services, and real estate investing. So I think most of us know Sabur. And of course, next to him and always by his side is his beautiful wife, Joy DeMary, DeMary. And she's such a great support as well. So when you need support and you go in and you put in email support at DeMary Funding, that's who you are dealing with. So I think most of us know that he, is a brilliant guy. Our debt weapon coaches, I am one of them. My name is Rosie Jones Clark, for those who do not know. I am also the membership chair. You can email me if you're interested in becoming a part of this program at rosie@demaryfunding.com. I'll also put that in the chat in a little bit, but you can find me at that email. Our other coach is Renee Allen. And Renee is not on tonight, unfortunately, or fortunately, I don't know which, but she's back at work and they had her do a double, so she wasn't able to be on tonight. But you can also reach her at renee@demaryfunding.com. And our other coach, who is Brandon Pollard. So you will continue to see Brandon on our slides because he will remain part of our coaching team. However, if you were on the call last week, you discovered that he is being deployed to go for the military. and he'll be gone, I believe, 6 or 9 months. However, his wife, she's generally on the call as well. So we wish our coach, Brandon, farewell, but we certainly pray for his safety and for what is velocity banking? It's a strategy that uses lines of credit to pay off debts faster than the traditional method. It's there to help you quickly become debt-free, as well as boost your credit score. The initial concerns that most folks have about velocity banking, it's a total new concept, and they don't really quite get it. Most of us are used to putting money in the bank and saving if we can save. Most of us do not know the 3 most important things that we need to know about our income. And can someone tell me what those 3 things are?
How much you earn, how much debt you have, and your cash flow.
Very good. I almost said amen. Yes.
Amen.
Yes. We need to know those 3 things, right? So most of us, we're trying to put money away. However, we have high debt. And so that money that we're actually putting away is not really doing much for us. And certainly if you're putting it in a regular savings account, the interest on it is very low, almost none. So the whole process doesn't fully make sense. And yes, in the very beginning, it really doesn't. There's some confusion around it, why we're doing it, how you do it. But if you hang in there and continue to create a movement, you will begin to see the true growth of your finances and why you're doing velocity banking. Will it actually help me? I think most of us, most of you on the call know already, and we've heard testimonies of how it definitely helps all of us to tackle our debt, to pay it down very quickly, and then to begin to prosper with credit lines. So if it's so good, why haven't I heard about it? That may be a concern for someone. And, for me, I had not heard of it either. However, once Sabur began to explain it to me, and I became very active in doing it and generating cash flow, additional cash flow, as well as paying down debts, I totally, forget about what I haven't heard, because there's a lot of things I haven't heard about. So, but this was definitely a great idea. Some folks are concerned, they're nervous about making such a dramatic financial change. I can't tell you, I coach, and, folks, we're still stuck in the saving. And if we don't have a savings, we think that we're not doing anything. And, we feel like we don't have. But because we're helping you build your credit line, you have more than you had saved. All right. So that's what we're trying to get you to, or working towards getting you to. Not trying, we're going to do that. Will I make a mistake and make my financial situation worse? Well, if you follow the steps, if you follow the coaches step by step, you should not fall into any financial situations where it's going to be worse than when you began this program. It should be better. However, if you decide to do something on your own and go outside of what we're teaching, then that could possibly happen. But that's not what we do in this program. So the key here is to trust the process, trust your coach, trust yourself, and certainly if you believe in God, trust your God. DeMary Funding Company, a movement is a movement. That's what Sabur will always say. You'll hear us say it over and over. There have been many movements, but the only movement that has made a difference in our lifetime are those that could see a vision, catch the vision, make a sacrifice, change behavior, be persistent, keep moving, make change for everyone. In the end, that last one, making change for everyone. Every movement that has ever been a true movement has not only made a change for that individual, but it has made a change for many generations. And so that is what we are working so diligently as part of DeMary Funding to ensure that that is happening in your family. So I am now going to turn this over to Sabur. Sabur, I'll stop sharing. If you guys could just put your hands together or give a yoo-hoo for Sabur on
Do
tonight.
not do that, y'all. Do not do
Yoo-hoo.
that. Do not listen to her. How's everybody doing? All right, so I just want to start off again. I said earlier, if you're going to be doing real estate deals, it's very important that you sit. I don't care if it's a best friend, family member, whatever. Do not send anybody money. Make sure you find an attorney or a title company to do your closing to send your money to, please. And I had so many bad deals. We always hear the success that's going on in our group. But if I personally had so many bad deals with people taking my money, I'm still chasing the dude right now. So it's horrible, And so just always remember, this coming from me to you. Even if I ask you, hey, I'm about to do a real estate deal, send me 20,000. Yeah, I'm gonna send that to the title company, Sabur. Yeah, whatever. You just always remember to do that. Next thing is I want to talk about before we jump into the subject of the night is anybody that's going to do the business course in November, I need for you to create a bio, okay? A credit bio or a financial bio. It can be a summary, it can be a quick one. The goal is what we're going to teach in this class is we're going to try to give people an opportunity that don't have businesses. I don't know, some of y'all signed up previously and you got my ebook, the DIY, the do-it-yourself credit repair. We want to use your bio and X mine's out and put yours in there. So that way we can teach you how to market that DIY, $15, $20 on your Facebook, social media pages, whatever. That way you can start learning how to market, because marketing and advertising is one of the biggest things in your business that you're going to do to make your business grow. So we want to give everybody an opportunity to actually have a business or have something that would actually allow them to create a passive income. I know $15, $20 is not a lot, but the experience that comes with it, and not only that, you're giving somebody a DIY, do it yourself credit repair. And anybody that's seen my credit repair, it comes with 65 letters, all the credit bureaus, all those type of things like that we try to make sure that people have to equip them to restore their credit, build their credit, and blah, blah, blah. Renee not here. She get mad when I say blah, blah, blah. Anyways, going on to my next topic before I get started with I want to make sure that everybody is not ballooning. But last week we went over the ABCs. We had to go back. You need to make sure you're putting all your debt onto your line of credit, and you're only using that line of credit for your expenses, your whatever that you have coming in and out, going out, vacations, cars, and things like that. Anybody that's in the private Facebook group, I was up earlier again as always. I was up this morning about 4:00, and I had put in the private Facebook group. It just sat on my mind, so I wanted to share a quick story that I put that I had yesterday with my mortgage processor. So we were going over the DTI, the debt to income ratio, because we're buying a new house, and we didn't use any business to get our pre-approval. We only used personal, so we came in at like 638 on the personal on the pre-approval. I'm pretty sure we could have came in way higher if we used business, but we wanted to do business is up and down, so we didn't want to use personal, basically. But anyways, we were talking, and she's like, how is it that you have a 0 DTI? And I'm like, well, it's the debt weapon program. She's like, you have no debt. You have no credit card debts, and we don't see anything. Like, how is that possible? And I'm like, it's the debt weapon program. In our program, we teach you how to leverage your credit, pay off your debt at accelerated rate, and if you do have debt, how to move it to non-reporting sources. She's like, I've never seen this before. Like, literally, most people are getting denied because their debt to income ratio is too high or they have bad credit. I'm like, well, this is the program that we teach, And she's like, I need this program because I have never seen this, sir. She's like, not even 1% utilization or DTI. I'm like, it is what it is. But, I was getting ready to buy a house, so I already knew what to do anyways. But I just wanted to share that with y'all because that is the power. When the banks look at you now, they look at us as a group, we look financially sexy. She is amazed that I don't have no debt, and it's not showing. I'm not reporting any debt. I don't have no car loan. I don't have no mortgages showing. I don't have no credit card debt showing. I posted on a private Facebook page that my current debt to income or my credit utilization is 0. And on the personal side, we have over $263,000 in available credit. So that's power. You know what I'm saying? That's power to us to have that. So I just want to encourage y'all, and I hope you find encouragement in that story that we all can do the same thing, just taking the steps and just moving. And again, movement is a movement, as I always say. Anyways, I'm going to go ahead and start ranting on that. And I just want to go ahead and start this screen tonight. I'm going to share screen 2. Can everybody see my screen? All right, so I don't know why one of the questions looked like it's missing, but so I heard somebody answer the question earlier. So let's define cash flow. Can somebody please tell me what cash flow is? Anybody?
The money left over after you paid your bills, you can utilize to pay down the debt, the rest of the debt that you still carry. Give it to your invest, basically.
Yes, sir. Appreciate you. Cash flow is the money left over after your expenses. So it's income minus your debt equals your cash flow. All right. Next question. These are simple questions tonight. Name 2 major credit bureaus.
Experian, TransUnion.
Appreciate you. All right. Name 2 products and services that banks normally offer.
HELOC,
Okay.
savings.
Checking, savings, mortgages, car loans. I just wanted to make sure that we all aware of products and services, because normally the reason why we talked about this in the past, normally as we grew up, we were just opening up a checking account just to put our money in and to pay our bills. But we don't really look for the products and services that we can utilize with this bank and build business relationships or build personal relationships to get those high limit credits. Most of our debt weapon members or groups have a 25 to up credit card with some of the credit unions that I've talked about in the past. Normally, we wouldn't even seek those type of products and services. We were just putting our money in there and paying our bills out of that account. But now that we know the program and we're utilizing our credit properly, we're getting high limit cards. We're building personal and business credit. So that's the goal here, okay? Yeah, I don't know why that just popped up. It's like late. It just came up late. All right, so my next slide is talking about tax day. We've talked about LLCs in the past and how to file your LLCs and everything like that. But I figured tonight would be an important night because taxes are coming due in a couple of months, less than 2 months away, okay? So if you're an aspiring business owner or you are currently a business owner, I just want to make sure that we're all on the same pages. I want to talk about my 5, and again, my 5 tax write-off deductions for LLC. So again, I put here my top 5 write-offs for LLC from DeMary Funding Company, things that me and my wife personally use because we are a small home-based business. Even though we have 29 properties, we don't have the number of employees that can make us consider a S Corp or a C Corp. Okay, so we're a small company. We use a LLC. Normally for a S Corp, it's anywhere between 2 to 100 employees or shareholders. On a corporation, C Corp, is 100 plus 100 to 500, or basically 101 over that makes you a C Corp. So LLC is you can be an LLC or a partnership LLC with a number of people. If you don't know anything about an LLC, please reach out to your coach. Again, this is for inspiring business owners and current business owners. If I lose you, please feel free to stop me and ask any questions. We're always open to questions while we speak, okay? All right, so the first topic of the night, I put in here, our mission is to educate on how to leverage your credit, finances, and use the velocity of time and money. Most people, before you join this program, and they'll tell you, they always looked at payments. We are teaching you payoffs. So you're going to accelerate your debt using the velocity of time and money instead of making payments, waiting 5, 10, whatever, making monthly payments. We want to pay these things off as fast as possible. That way you increase your monthly income, lower your DTI, and also have money that you can actually reinvest or use for other assets protection. Okay, does that make sense? Anybody first time on this call? This group is about showing you the correlation between credit, investing, and paying off debt at accelerated rate. Again, credit, investing, and paying off your debt at accelerated rate. That way you can create passive income, you know, having we call it mailbox money, that you just go to the mailbox and just, you know, there's checks there. We don't really do that now because with 2021 technology, but just having that money coming in every month residually is very good. And I'm sorry, before I get on to the topic of the night, anybody got any good thing this week? I know Michelle, she's sitting there all pretty with her hair done. I know a lot of things, a lot of things fell off her credit report. The scoring changed, but a lot of things fell off. Anybody else got any good news for us this week? Anybody credit scores changed? I know I looked at a lot of people's credit scores. I see some people like 750 plus now. So I know that y'all up there. Nobody want to talk to us? All right, well, we'll share later on then. I'm gonna go ahead to the topic of the night. Somebody about to say something?
Oh, I don't know if you wanted to
No,
share.
I know we reported ours is up. I'm up at 780, I think, on one of mine. Like, so things are going forward for us. It's starting to build really fast.
No, I
Now we
appreciate
need
you.
to get a deal.
Get us back to
Yeah. We're working on it. I got y'all. I promise I got y'all. Yeah, I seen yours. She put your scores as hers because hers is a little bit lower than
I had to fix that. I had to fix that.
You like, you better make that correction. That's my score. I saw that. All right, so there's a number of reasons why you decide to start an LLC. You may be a new business owner. You just started earning a 1099 income. That can be from being any kind of security, Uber driver, a truck driver, anything that's basically as a contractor, you make 1099 income. And you want to, shield yourself. Or maybe you were told you need to create some type of legal entity. Another thing is, like, maybe you're like me, a mortgage note broker like myself, or invest in seller finance properties, rentals, etc. And you want to have a legal shield. That's why you create an LLC. LLC is basically another extension of you. It's still you, but it's just an extension of you as the business. I think Jay-Z said it best. I'm not a businessman. I am a businessman. So the LLC is the business part of you. It allows you to have asset protection. If anybody sues your company, they can sue your company, but they can't sue you. They can take, that type of thing. If somebody trips and fall on one of your properties while you're doing the rehab, or you got a contractor get hurt and they want to sue or whatever, or they, contractor missed payment or whatever, or say he didn't get paid, they can sue the company. They can't sue you. That's why you created LLC, to have that legal protection and shield. So tonight, again, I'm going to talk over my top 5 tax strategies. I did put a disclaimer here, and I just want to make sure I read it out loud. But DeMary Funding Company is not a financial advisor nor a tax attorney. This information is for educational purposes. I highly recommend that you speak with a tax professional or tax attorney before planning on using any of these strategies that we talk about tonight. Again, it is very important. Tax season is coming around for new business owners or current business owners to learn how to utilize and get these tax write-offs. That way you can save money that you use or pay yourself, okay? So the first one, for new business owners, even people that's been in business for a couple of years now that never took advantage of this tax write-off. This tax write-off is called a startup or organizational cost. So a startup or organizational cost. A startup or organizational cost allows you to have $5,000 deducted from your taxes. There's a $5,000 deduction for startup, okay? So as a business owner, chances are you'll have startup or organization costs. This can be in the form of building your business, marketing, advertisement, business setup, equipment, websites, training, mentorship like this. All of these are write-offs, You think about it, that's why I always say I'm not really taking $100 from you. if you're learning this program, because if you think about it, and I know Rochelle and them, when they did their invoice, they're like, hey, so boy, don't put that in my business personal name, put in my business name. I can use that as tax write-off. They're thinking on an investor and an education, you know, on a business level. You know, training and education are all tax write-offs. So even though they're paying their money monthly, they already know at the end of the year they're going to get that money back as a tax write-off. So I appreciate y'all doing that. And any business owner that's not currently being billed as their business or being billed personally, we can definitely change that for you so you can get that tax write-off. So that's what we're here to do to help you. Okay. But anyways, anytime you have a cost before your business become operational, it is considered startup and organizational costs. The IRS allows up to $5,000 for the first year. If your business startup cost exceeds $5,000, the IRS will amortize the cost for 5 years. Okay, and I put an example in here, and this means that if your startup cost is $20,000, you'll get a $5,000 deduction for the first year, and then you divide the remaining 15 by 5 years, you'll get another $3,000 deduction. Okay, so that you'll still benefit for the cost exceeding the $5,000 over the 5 years. Okay, so just be mindful when you file taxes to include all of your startup costs, because you want to make sure that you get those deductions. Again, if you're starting a business, you want to make sure that you get all the tax deductions. The IRS will give you $5,000 deduction on the first year. Okay, makes sense before I go on to our next slide. All right, next slide is going to be the home office deduction. Most of the business owners that are on this call right now that have a home-based business, they already get this one, but I'm just going to say it anyways because I personally love this one because you can get this annually. This is an annual write-off. So the home-based business deduction is one of the biggest tax write-offs that you can take, again, every year, annually. You take the same tax write-off every year. So how to take advantage of this deduction is very simple. If you have to have a designated office space, a room, or area in the house that you work out of. You qualify for the home-based office or home office space deduction. Now, note this space must be strictly for business. Okay, you can have a corner in your bedroom, an office itself, a bedroom, but that space by the IRS has to be strictly for business purposes. Okay, but it's very simple to qualify for this. And here's how you take advantage of the deduction. I gave an example. All you have to do is you get the square footage of your space that you're using and divide that by the total square footage of your house. Again, you take the square footage of the space you're using in your house, and then you divide that by the total square footage of your house. This is going to give you the percentage by dividing it. That percentage is what you're going to claim on your taxes. Okay, and this will give you your tax write-off there. Again, these are top 5 strategies I want you to learn how to utilize because you're going to need these as a business owner. Okay, you want to get as much money back or pay as less money as possible to the IRS. All right, so another thing that I put in here is note utilities like water, gas, electric. Those are also can be written off as expenses towards the home office deduction. Also, office improvement, your area improvement, any rehab, any space or maintenance that you need that goes on in the office. Say you have a regular door like we had, and we end up putting French doors in there so we can actually close. That cost of that rehab, that cost of those doors, that cost of that labor and material were also write-offs because it's for our home office. Okay. Next slide I want to talk about is one of the most talked about. I call it the hot topic, but it's one of the most talked about. Anybody on the call that currently have a vehicle in their business name? Oh, you do, Armando? Okay. You unmute yourself.
Yes, sir, yeah, we do.
Yes, sir. What vehicle deduction are you using currently? What strategy are you using?
Well, it's the company truck, and we utilize it for out prospecting for properties, for delivering materials and picking up items that we need for the business. So it was just, and it's an older truck that I had before, but they were able to incorporate it into our business because it's specifically used for the business. We don't use it for anything else.
Yeah, but I'm saying when you file your taxes, what are you using a strategy to file that? Are you using mileage or what?
We're using
Depreciation rate.
depreciation.
You use
Depreciation.
Placeholder, depreciation.
Okay, so
Yeah.
I'm going to talk about that real fast. I just wanted to see because I know some people on the call that's business owner. I just want to see if y'all had a vehicle. So anybody that's a business owner or self-employed and use their personal vehicle or business vehicle, their car can be deducted as expense on their tax returns. If a taxpayer uses their car for both personal or business purposes, you have to learn how they split those expenses. That's very easy. There's apps that you can use when you get in the vehicle for business. You just turn the app on and it will report your mileage and it'll send you an updated report to allow you. One of those is going to be Mile IQ and QuickBooks. All right. But I call this the hot topics because there's 3 different ways or 3 different strategies that you can actually use to get that vehicle deduction. Okay. So when you purchase, I'm sorry, I'm reading this here. I'm looking this way. I got screens everywhere. So I'm going to look this way, y'all. I'm looking at the screen now. When you use your vehicle to travel for business, you can get a tax deduction. There are 2 ways that you can do this. The first way is called mileage. Taking mileage. Taking mileage allows you to get 58 cents per mile that you drive for business. So if I leave, Virginia Beach right now and drive to Tennessee, that's 700 miles. So 700 miles, I get 58 cents for that as a tax deduction. Many people like Uber, Lyft, I know Michelle on here doing Toro, 1099 truck drivers. This method is extremely important because of, this is very, because they want to get that mileage. Anytime their vehicle or personal vehicle is being used for business, even Toro, you can track the mileage that when those people go out and you can actually get that mileage used as a tax write-off on personal and business if you're doing Toro, Uber, or Lyft. But again, this is for LLCs. So I always want to recommend if you have an LLC and you're using these strategies for your LLC. Okay. The second way is called, which Michelle and them just spoke about, is called vehicle depreciation. So in the eyes of the IRS, a vehicle depreciates over 5 years. Meaning if you purchase a vehicle in your business name for $50,000, that means you can get a tax deduction of $10,000 because it's 5 years divided by whatever you paid for the vehicle for $10,000 in this situation for each year. Okay. This is known as a straight line depreciation. So you want to make sure that you get it. Now, one of the big things that you see is, I know a lot of people like when you watch TV, you see the love and hip hop and all these things like that, or you see the rappers and they have the G-Wagon, the Mercedes G-Wagon. Now, understand, this is a full write-off. So this is one of the strategies that a lot of people don't know. This is called a full, I'm actually skipping, I'm sorry. There's 4 strategies. I'm skipping the strategy. There's another method called double declining. And this example is basically called a salvage value of your car. I don't think nobody really uses this, but I put it in there because I have this information. But so say your total cost of the car was $20,000. The useful life to the IRS is 4 years. That's what they call salvage. So the salvage value of that car is going to be $4,000. So you'll get a $4,000 deduction if you do the vehicle, the double declining. So they're basically going to divide that by the 5 years, and they give you the $4,000 off 1 year. Okay. This topic that I was just about to I jumped on, is going to be the code section 179. Again, anytime you see rappers or anything like that, or you see the G-Wagons and they're a business owner, or any kind of car that weighs over 6,000 pounds in 1 year, you can actually use the purchase price of that vehicle as a full tax write-off. So that's why you see people that have like G-Wagons and things like that. Whatever they pay for that car, they get a full tax deduction on that vehicle, meaning you basically bought a car for nothing. You get not pay taxes on that car. You get a full tax write-off. And if your business didn't generate, you actually get money back. So that's why I put the dollar signs off that. So just
A
FYI.
6,000 pound, what is this? What's a G-Wagon?
You don't know what a Mercedes G-Wagon, the ugliest car ever, but everybody loves it. I don't know why. I don't like it. I don't like it. Yeah, the Mercedes
Wait,
G-Wagon.
6,000
It,
pounds?
yeah. Anything that weighs over 6,000 pounds. Yeah, it weighs about 6,000 pounds. Yeah. That's why everybody goes to that vehicle. I don't like it. Anybody like G-Wagons on here? But besides me, my daughter loves them. I think they're ugly.
I like the G-Wagon.
Who's that right there? I can't see you talking.
Raheem.
Oh, Raheem, you like the G-Wagons? I don't like them, man. They just, they don't appeal to me. I think they're ugly and cost way too much money for that car.
That's a heavy car.
Yeah, it's a heavy car. Yes, it's a heavy car. I think it was made for off-road. It was supposed to be like the Hummer of the Mercedes line or something like that. So that's why they call it the G-Wagon. Anyways, so we talked about this next one already quickly. It's going to be called the immediate expense deduction. So in the immediate expense deductions, we all know no business is going to be able to function without marketing and advertisement. You know, if you're selling a product and service, you must market and advertise, market and advertise, market and advertise. Especially like on my online businesses that we have, 99% of that is marketing. You know, we make money, it goes right back into marketing. So I definitely like the money that we use here, we actually put that money into an investment account. But on my other business, my online business, it goes right back into marketing, advertising, increase sales. So one good thing, but it's called immediate expense deduction. You're allowed to use those two deductions in marketing and advertising at 100% of your cost. And this is a big business deduction. So if you pay, you know, $20,000-$30,000 for marketing and advertising, that $20,000-$30,000 is the full tax write-off for you at the end of the year. Okay, so that's very important. If you're going to market your business, this marketing and advertisement is very good. I didn't put anything in here about this, but I just want to share this with you business owners. I know a couple of business owners are already doing this that I have as a personal, that I'm coaching. But if you make a post from your business page on either Facebook or Instagram, at the corner, there's called Boost, okay? That Boost allows you to use a credit card, even if you have a PayPal account, to link that to do your marketing advertising. So they'll reach different audiences. So even though me personally, I hate putting my ugly mug out there. Rosie will tell you, I always say I'm an ugly dude, but I got money, so I don't care. I'm an ugly guy, but I got money. But that's not the word I use. I use the N word. I use the N word, but I can't say that on the call.
I don't know where you got the ugly from. So.
She gets mad at me, so stop saying that.
You're not ugly.
Yeah, but I always.
I'll let you know when you get ugly.
But yeah, you definitely can use those strategies to market and advertise your business. So say you make a post, it could be a picture, something quick, whatever, and you want to get more audience and more eyes on it. You just use the Facebook link. It's called Boost on both at Facebook and Instagram. I think to reach like 1,000 people, it's $2 a day, so $6 for a 3-day or 5-day span that you want to do. Whatever number of days you want to do. I think the minimum is 3 days, $6 to reach 1,000 people for marketing and advertising. You know, of course, those costs add up over time because you want to start reaching more and more people. But again, you start at $2 for 5 days, see how much audience you get, what's your analytics, how many people reached out or how many people responded, how many people liked your product or services, then you'll know when to increase your marketing. And again, it doesn't really matter, $6, $30 a week. Those are full tax write-offs and deductions. So again, it's about marketing and advertising your business. So I hope that you all are utilizing these strategies here. All right. So the next one I want to talk about, and this is the last slide of the night as far as my 5 business write-offs, is filing your LLC as an S Corp. We spoke about this before, and I'm not really going to dive into it unless somebody have questions, but I just want to talk about it so people that have not listened to that call, it is on YouTube. But for those that have listened to me rant about this, I just want to go back and reiterate this for you. So I put in here, many people would tell you that when the benefits of the business, meaning you're making more business, more money, and enjoying life, outweighs the cost to turn your LLC into an S corp. So if you're a startup business and you're struggling for the first couple of years, and all of a sudden your business start making money, most people are going to run to you and say, okay, now you need to move your business to an S corp. However, you can still get the benefits of an S corp by being an LLC without refiling, and an S corp costs more. It's like close to like $2,500 more in most states, and where LLC is only like $300-400, annually. So you can still get the benefits of an LLC being filed as an S corp. So there's 3 forms that you can use. You can either use a 2553 or the 1120S. I use the 8832. It's just when you go to your tax attorney or CPA at the time of filing, they would just check that little box for you that you're filing as an S corp, and that gives you the S corp deduction. Now, the reason why I like using the S corp deduction, most people, if you have an LLC and you don't file as an S corp, there is a employee tax that you pay on the money that you make, which is 15.3%. As an S corp, you don't have to pay that self-employee tax because the IRS wants you to pay yourself out of the business as a shareholder. Okay, again, they want you to pay yourself out of the business as a shareholder, which makes it beautiful. For example, if I make $100,000 just for this year, and I'm just using simple numbers, I make $100,000 this year, and I pay myself as a shareholder $50,000, half of that money. Okay. Now they ask that there is a rule that you have to use a considerable or a what is it? I'm trying to think of the word I'm trying to use, but they want to make sure that it's a fair compensating fair. You don't want to pay yourself higher than the market is paying themselves. So $50,000 for your job title is basically, is it under, too much? You want to be basically where they're at. So if I pay myself $50,000 as a real estate investor, because we know real estate investors making more than $50,000, so I pay myself half of my corporation's income. I only have to pay taxes on the $50,000. Using the other 4 strategies that was in here, I pay nothing in taxes. That's how business owners get away without paying taxes. Okay, so that's strategy. That's the method that you use is being an LLC, but filing as an S corp. You pay yourself half of your income salary for the year. You only have to claim taxes on the remaining balance, that money that stays in the business, and you use all the business write-offs that you possibly can. And you end up walking away with paying nothing, and you still have all your money that your business generated for that year. Okay, so, and I put in here, so in this example that I just spoke about, you get to control the amount of money you pay yourself and how much you pay in taxes. Again, I am not a tax attorney. I'm not a tax advisor. I'm just telling you strategies that I use personally to make sure that I have little to no business debt or have to pay taxes as a business. Okay. So lastly, before we close out for the night, I don't know why is this doing that. All right. So how to buy a business in your vehicle name. I know it's going to come a question for people that don't have. I know.
How about
how to buy a vehicle or how to buy a car or vehicle in your business names. Okay. I know it's going to come up. It's very, very simple. The first thing is that you need to build your business credit up over 100,000 and stay under 30% of your available credit. The reason why I say $100,000 is not a written in stone type of situation, but the reason why is if your personal credit is not over 700, your interest rate is going to be much higher on that vehicle. Okay, so and not only that, if I only have $5,000 of available business credit and I go to buy a $40,000 car loan, again, my interest rate is going to be high because the financial institution is going to look at me and saying, well, Sabur, you never really had any kind of loans or any kind of thing that exceed the current amount that you currently have in sellable credit. and you only have 5,000, but you buy about a $50,000 car, we're not comfortable with you. Your risk to them, you're a risk. So their interest rate is going to be higher on that vehicle. So again, if you have over $100,000 and you're utilizing, you're staying under 30%, then I go buy a vehicle for $50,000. My interest rate is going to be lower because I know how to utilize that 100K. You know what I'm saying? Makes sense? All right.
Yeah.
So the next step is to find a dealership that has a commercial sales department. This is really simple. Most dealerships have a commercial department in there that actually sales department that does commercial vehicles. But I just put that in there just so that you know. So again, first step is to build your business credit, find a dealership that has a commercial sales department. Next one is to provide your legal documentation. You better have this legal documentation. It's just basically going to be your LLC, your EIN. They just basically ask for your LLC, your EIN. They don't ask for bank account statements or anything like that, but sometimes it's good to have your financial information. If you're a business owner currently, tip and tool, if you first time on the call, you need to have a NAV account. The NAV account will show you your business scores. That way you'll know how you look when you go in there, if you look financially sexy or not. Most times on the business side, payments does not hurt you. It's going to be most based off available credit and your utilization. But again, if you have missed a payment or anything like that on your business side, maybe you're crossing your checking and business account and they went to go do an auto draft out of your checking account for your card on your business side and you didn't have enough money in there. That's going to be considered a late payment. So when you go apply for this card, they're going to see that late payment on the business credit side. So you want to make sure that, you look financially sexy, both personally and business-wise. Pay your bills on time. They're not going to really ask for financial information. If they do, you already have it available. And it's just simple, your business checking account information. They want to see basically your profit and loss sheet. Again, you just finance the car in your business name. So again, by having your legal business information, your EIN, you're financing that vehicle in your business name, or you purchasing that vehicle in your business name. Financing, again, to me, is going to be the better way. You're going to keep your money that you have for that vehicle, and then Velocity Bank keep that vehicle with the cash flow or the money you have generating out of your business or your personal, whatever way you want to pay that car note off. But we're going to Velocity Bank it for sure. $50,000 car, Velocity banking with $2,000 cash flow. We'll have that car paid off in 14 months. And it's in your business name and doesn't report to your personal side. However, my last part I want to put in here is I always say this to people. Most people want to get a car or most want to get a loan or want to get a line of credit with no PG, meaning no personal guarantee, meaning the card or the car in this situation is not reporting to the personal side. If you're new to a business and you're not on your second or third vehicle, always do a personal guarantee. You want to insure that car saying that, okay, my business side, my personal side looks sexy. The reason why your personal side looks sexy is because if you had any kind of outstanding debt, we don't move it over to the business side. So your utilization and your debt looks like zero. Everything's on the business side. So you're going to personal guarantee that, and you're going to get a much lower interest rate off that car. So, for example, I bought my wife a Mercedes. It was like $42,000. They made me personally guarantee. I went through Mercedes-Benz financing. I got a 2% interest rate on that car. And we would put it in the business name. Because I personally guaranteed it and my credit score was over 800, I only got a 2% interest rate, on the $42,000. That's chump change. That's nothing. You know what I mean? So just always remember to, personal guarantee. Sometimes you can do a no PG. If you're on your third or fourth car, fine, do a no PG. You don't want to report to your personal side. You don't want to do nothing with your personal. But if you want to get a lower interest rate and basically utilize the strategies that we teach in this program, do a personal guarantee. It's not going to hurt you. It'll show up on your credit report, but as long as you're making your payments and you're going to pay it off as fast as possible as we teach in this program, it's perfectly fine. Okay. Lastly, again, with the car, now that you have the car and it's in place, You want to make sure you insure the vehicle, whatever insurance company that you wanted to insure, make sure you insure that vehicle. And again, at the bottom, I'll put down here, you want to use the tax deduction. You want to claim a tax deduction by one of the 4 methods that we use. Make sure you consult with a tax professional for the method that works best for you. Me, I like the mileage. I know Rochelle and Armando, they're using the depreciation. Some people use the double depreciation strategy. It doesn't really matter. Just find a strategy that works for you and make sure you get the biggest tax deduction, okay? With that, I got my debt weapon coaches information in here. A couple of them are out. Renee went back to work, and they are killing her. She's doing doubles, doubles after doubles after doubles. And Brandon, as you all know from last week, he's away serving our country. He's in the military. He's away serving our country. So we applaud him. But if you need anything, please reach out to me or Rosie or Support, which is my wife, who put this PowerPoint slide together for us tonight because I was so busy this week. I had 10 closings today, and I was I was crying like a big baby. She's like, I got you. Just go ahead. So I appreciate and applaud her for helping me put this thing together. My slides be having all types of pictures and dancing and all that type of stuff. So it was, I ain't gonna say nothing, but it was plain, but it got the point across. So anybody with that, anybody got any
The
questions?
words were flying in on you, see?
Oh, yeah. She did do that. Anybody got any questions or anything about this tonight? Anybody have any good news that they want to share with us? I did not get that at the beginning of this session like we normally do.
Sabor, you can share back with me as well, please.
Yes, ma'am. All yours.
Thank you.
Now,
Anyone have
now
any
taxes
good news?
is very, very important. So somebody better ask me a question because unless are y'all business owners not filing these taxes? So it's very important. Go ahead, Michelle.
I just wanted to ask, can an LLC have more than one owner?
Yes.
Because when I was looking into the PPP earlier in the year, the bank that I used, they were telling me because we had 2 owners, because the LLC is supposed to only have 1 owner. They said the LLC is supposed to only have 1 owner. Why do you have 2? I'm like, what do you mean? We're husband and wife. So
It's really strange that they said that because even if you're husband and wife, you're still considered one owner. They still treat you as one entity. So like me and Rosie was a partner in an LLC, then we'll be a partnership LLC. But if husband and wife, they don't even call you a partnership LLC. It has to be a third person as a husband and wife to be a partnership. But as a husband and wife, you're still considered a single entity LLC. Yeah,
That's strange.
Yeah, that's very strange. I'm not sure why they said that to you. Or what were you trying to get done?
I was trying to get information about the PPP loans that they were given out at the beginning of the year, and the credit union that I bank with. You do your bank. So I was asking them the question, and then when I filled out the information, and they said, "Well, LLC's not even supposed to have 2 owners." I'm like, "What?"
Never heard that a day in my life. Never heard that a day in my life. Yeah, I don't know. I've never heard that day in my life. So a husband and wife is considered a single LLC. If you add a third party, like an outside entity out of your family, then that's considered a partnership LLC. I don't know any different. I don't know anything about that PPP loan. I had people, man, they were getting knocked off their head with scamming, and they got bank fraud and getting locked up. I personally didn't know anything about it. I didn't touch it. I seen people getting it, flossing with the money. I had one dude that was on the call with us. We were mentoring for a minute. He had 3 of them. I mean, how you get it? So I really don't know anything about it. I ain't touch it. I ain't want to put my hands on it. So I don't know anything about it. Anybody else got a question for me?
How do you feel about leasing under the business? Leasing cars?
Leasing a vehicle?
Yep.
It's fine. But you cannot do the vehicle depreciation. The only thing that you can do for business, or you mean personal? I'm sorry.
Business, yeah.
Oh yeah. Business. Only thing you can do is the mileage, anyways. which I use as mileage. So if you do list a vehicle, they won't let you do a double depreciation or vehicle depreciation. And you, of course, you can't use the code section on 179, but you can get the mileage. You can do the mileage.
So I know some folks who had leased through their business, but they don't put that many miles on their car.
I mean,
what's your thoughts around that? I mean, I know you can claim other things, but
yeah, but so you still got other things you can claim. You got tires, oil change, maintenance, anything like that. Those are all depreciating, or those are all costs that you can actually use as a tax write-off for that vehicle. So it's just not the mileage you driving back and forth. Because most people that have a lease, they don't want to go over that mileage anyway, so they have to pay that dollar amount over. So they use that vehicle very seldomly. And again, you still have other costs that you can use that goes into that vehicle as a depreciation value. As a deduction of the value of that cost.
yeah. Thank you.
Yes, ma'am.
Any
Anybody
other
else got questions?
Anyone? Is there anyone on the call that already have a business?
Yes, and some people are not utilizing their businesses, I know.
But that's okay. Who is
I'm looking at the screen.
it? Who is it?
I'm not gonna say no name. They know. but if you have a business and you created a business, an LLC years ago, and you say your business never generated money, this is very important. So your business never generated money, and you started it up, and you never filed taxes on that business yet. When you go and your business starts generating, you can still use the startup and operational costs, even that business LLC was created years ago, because you haven't used that tax deduction yet. So say if you use the credit, I know some people in here that created a business 4 or 5 years ago.
Can you say that again? Sabur?
Yes, ma'am. So if you created your LLC 3-4 years ago, and you did the the setup and operational cost, that deduction that you can use, because it's part of you setting up that business, you never used that deduction yet. Once your business starts generating income and you want to use that deduction, you have the right to go back and use that deduction. So if you bought an office space, you bought office chairs, material, got your website built, you did maintenance on the room that you're in, some kind of repairs or rehab, you put French doors on it, you changed the windows, all those things that you did for the office to make it your space, are all tax deduction as part of your startup costs and operational costs. You can still use that because you never used that deduction yet. Okay, and again, if that cost exceeds $5,000, the IRS will amortize that for you for the next 5 years. So again, if you in a situation, say you create your LLC 5 years ago, you just start doing the rehab on it, and it costs you $20,000 to get that fixed. This year, you can use that $20,000 that startup and operational cost, even though your LLC started 5 years ago.
Oh, that's good. Thank you.
Yes, ma'am. Another thing again, topic again before we get off the phone, office space, designated office space. I don't care if it's a corner, nook, or cranny in your house or outside. Please, please, please make sure that it's only for business only, because sometimes I know I got a friend that had got audited and he was using his kitchen. He had to take a picture of his kitchen table, but if he passed the audit, because they were like, okay, don't you eat here? Don't you do this and that and there? And he's like, no, we eat in the living room, blah, blah, blah. So he has a formal room in his house. I know a lot of people that have like a formal dining room area. Most people don't use that anymore, because they have a kitchen nook or whatever. But he had a formal dining room area that has one of the long dining room tables in there. And he showed all his stuff on the table and took pictures of it. So that was his office space. So they were asking why did he not eat there. He said, we don't eat in the formal dining room. That was office space. But again, you have to have your area has to be designated restricted for business only, if that makes sense. All right. No questions. I want updated credit scores. When I get, please post updated credit scores. Anybody that's thinking about joining the business program that's coming up in November, I need for you to make a quick bio. We have some good things coming around that quick bio that you created. This bio is going to be, Rochelle and Armando's life situations of growing up, are coming together as a husband and wife going through their credit struggles, whatever, just examples. I gave my backstory in my credit repair book about me and my wife, personal finances, and how we created passive income to get to where we're at now. And, something like that, just tell people who you are and how you have a passion. We try to, help people as we try to do with all of our team members here, okay? But I'm going to shut up, and everybody have a blessed weekend, and I will see you all next week.
Sabur, we're not done. Sabur?
No, I'm just muting myself so you can take over. I'm sorry.
Oh, sorry. Okay. Thought you were hanging up here. All right, guys. Thank you so much for being on tonight. What's our next steps? If you'd like to become a member, we have our level 1 bronze foundation bronze, which is our velocity banking credit repair. And then we have our level 2, which are business gold, building business and securing lines of business credit. And then, of course, our level 3, investing silver, building partnerships and other ways to invest. Some of you may be already on the verge of starting to do the business gold. Your coach should be talking to you very shortly about that particular program and how you may need to start to think about moving over. And then there may be a few people on that are part of the investing silver as well. Your coach will let you know when that time comes for you to start to move over into that arena as well. Also, you can find all of the videos on YouTube at Sabur DeMary under, is it Velocity Banking or Debt Weapon, Sabur? I'm sorry.
Debt
Sabur,
weapon. I'm muting myself. Debt weapon. Sorry.
That's okay. Thank you. You can find it under Sabur DeMary under Debt Weapon. So all of the videos from our Fridays will be posted on YouTube. As well as please join our Facebook page if you are a member. It's a private Facebook page, and you'll find that as well under Sabur DeMary under Debt Weapon. Do we, by any chance, have any new members on tonight or new people for the very first time?
You guys, we would like to introduce Raphael. He's a friend of my sister's and our friend too.
How's it going, Rafael?
Hi, Raphael.
Hi, Raphael.
Well,
How did you enjoy tonight? How did you enjoy tonight?
Very much I did. I feel like I stumbled into the room where we find the secrets of how the rich stay rich.
Yeah. Absolutely. I think you have. And thank you so much for joining us tonight. If you'd like to know more, just reach out to Rochelle and them, and they'll put you in contact with us. If you'd like to become a member, we'd be more than happy to have you and to help you get onto your financial sexiness.
Hey, Raphael, I just want to add to that. Tonight was a little bit of a higher level, I should say. Normally, we try to stick to the ABCs of this program, but again, sometimes us going over the ABCs can get redundant and people get tired of hearing me talking about that. So we do try to bring different topics. So we definitely, I know Rochelle and Ramondo, they have it down packed. They've been sharing our information with plenty of people. I definitely tell you, get with them so they can teach you the core basics of what we teach here in this program to take you to the next level financially wise. Okay, sir?
Yeah, thank you. I appreciate that. I might look a little young, but I follow a lot of financial stuff, and I usually ask a lot of these odd questions because I have heard about 2 or 3 of these, like of the 5 deductions you've asked about. And I actually just talked to my tax person a couple hours ago today, and I bought a house. I'm house hacking it. I already set up an office space before, even though this will be my first time working on taxes and all that for this. Mm-hmm. But I'm following, a lot of this already, and obviously learned a lot too. Took a bunch of notes for sure.
Yeah, I appreciate you, man. Appreciate you. That's what we're here for, man. Movement is a movement, man. We're a community here, man. I appreciate you.
That's
so I'm
awesome.
excited for it. I want to see how far we can go.
That's awesome. Thank you. Also, we have a new member. Everybody unmute yourselves and go, woohoo!
Woo! Who's that? I'm sorry. Woo! I'm sorry.
Welcome, Nikosha.
Nicosia. Hi, Nicosia. I think I haven't met with her yet. Have we met with her yet personally?
Renee has met with her. She's her coach.
Okay. Okay. Gotcha. Hi, Nicosia. Nicosia. I'm sorry. I'm Sabur. I should jump on your next call. I'm always on the first call when you meet with your coaches, so I can get a clear picture of your financial situation. But I welcome you and welcome to the program. I promise you that we're going to take you to the next level, okay?
Okay, thank you so much.
Awesome. Well, everybody, thank you so much for being on tonight. We really appreciate you guys. Can't wait to see you again next Friday and hear about all the great things that are happening. Come on, somebody. We got to keep up with Rochelle and Armando. Thank you, guys. Good night. Thanks so much, Sabur.
Good night.
Good night, everybody. Have a good weekend. Be blessed.
Good night, everybody. Thank you.
Thank you. Everybody.
Good night.